Hey everyone, and welcome to this explainer. Okay, so if you've ever stared at a stock chart and just felt totally overwhelmed by all those jagged, zigzagging lines, wondering why a stock suddenly tanks or spikes out of nowhere, you're absolutely in the right place. Today, we're going to completely demystify all that jargon by translating it into a simple structural blueprint. We're taking that complex market data and looking at it through the lens of pure market geometry. Seriously, by the end of our time together, those random lines are going to look like a perfectly drafted architectural plan.
Think about this spatial analogy for a second. Ever feel trapped between a floor and a ceiling? Well, okay, let's dive into this, because this is exactly how market prices actually behave on a day-to-day basis. If you imagine price action as a physical object, let's say a rubber ball bouncing around inside a physical room, it becomes incredibly easy to visualize what the market is doing, right? It doesn't just float off into space, it reacts to the structural boundaries around it. When it drops, it eventually hits something solid that stops its fall, and when it rallies upward, it smacks into this invisible barrier that caps its rise. Understanding how price action move between these two extremes is literally the foundation of reading any chart.
And that brings us to the core definition of what we're looking at today. Market geometry is all about mapping the floors and ceilings of the market so we can understand price movements. We aren't just guessing where the price might go here. By looking at historical data, we can find the exact structural layout of the metaphorical building our market is trading inside of. Once you know exactly where the floors are located and where the ceilings are built, you're no longer just blindly reacting. You're actually anticipating movements based on the very geometry of the chart itself. So let's move into section 1, floors and ceilings defining the space. I want you to try and truly visualize that physical room where the market action takes place. Now, what's really interesting about this slide is how we compare our boundaries. Let's look at support, which is our market floor. In trading terms, support is that level where buying interest is strong enough to actually overcome selling pressure. Imagine a stock drops to $50, and suddenly buyers rush in because, hey, they see a bargain. That $50 mark, that's your floor. Buying interest literally supports the price from falling any lower. Conversely, we have resistance, our market ceiling. Say that same stock rallies to $100, but then sellers decide, you know what, it's overpriced, and they start unloading. That $100 mark becomes a rigid barrier where selling pressure overtakes buying pressure. It resists the upward movement. These two forces act as rigid boundaries, holding the price in a very specific space. So, how do we actually visualize this blueprint on our screens? Well, you have to draw horizontal support and resistance zones. Notice I said the word zones there. These aren't just razor-thin, exact lines drawn with a ruler. They're horizontal areas on your chart. To literally map out where the floors and ceilings are located, you just look horizontally across the historical price action and find the general areas where the price consistently stops and reverses. By highlighting these horizontal zones, you're doing the actual architectural drafting of your chart. You're defining the thickness of the concrete floor and the plaster ceiling that's holding the price action in. Which leads us to section 2, mapping the staircase. Understanding trend lines. As any experienced trader knows, markets don't just stay trapped inside one single room forever, right? Eventually, they're going to break through a ceiling or fall through a floor, migrating to a totally different level of our metaphorical building. To do this, they move using trend lines, and this brilliantly illustrates that concept. If support and resistance are the flat floors and ceilings of our building, then trend lines, well, they're the staircases connecting them. Think about walking up a staircase. Every step you take is just a little bit higher than the last one. That's your market making higher highs, creating an uptrend. Conversely, when you're walking down the stairs, every step is a bit lower than the previous one. That's your market making lower lows, carving out a downtrend. Honestly, it's a remarkably intuitive way to visualize market momentum. To apply this directly to your chart mapping, you really just need to follow these key points. First, you identify uptrends by actively spotting those higher highs. When the peaks of the price action just keep stepping up, you draw your trend line to map that upward staircase. Second, you identify downtrends by spotting lower lows. When the bottom points of the price action are continually stepping downwards, you draw your trend line to map that descending staircase. By locking in on these specific terms, higher highs and lower lows, you directly link this simple analogy to robust, actionable market mapping. So when you're looking at your screen, you're literally charting the path the market takes as it travels from the penthouse down to the lobby or vice versa. Let's move to section 3 and see how this builds. Executing your trade. Taking action. All right, we've spent time mapping the architecture. We found the floors, we've identified the ceilings, and we've charted the staircases. But mapping is only half the battle, right? Now we actually have to do business inside the building we just mapped out. So the crucial point is how we use this blueprint to actually take action. Step 1. Buy at support. Remember that $50 floor? When the price drops into that zone, that's your signal to buy, because the structure tells us the price is highly likely to bounce back up. Step 2, sell at resistance. When it rallies to that $100 ceiling, that's your signal to sell, because the structure tells us the price is likely to be pushed back down. You're literally just letting the geometry of the market dictate your moves. So, the market has drawn the blueprint. The question is, are you ready to trade the floors and ceilings? We've taken what seems like totally chaotic chart data and organized it into a logical, structural space. You now know exactly how to map the zones, chart the staircases, and buy the floor while selling the ceiling. The architecture is sitting right there on the screen, just waiting for you. The only question left is, now that you can clearly see the blueprint, what are you going to build with it? Thank you so much for joining me for this explainer, and I really hope you never look at a price chart the exact same way again.